And what are those reasonable bases for splitting the profit or loss between prior to incorporation period and post incorporation period? And this obviously this question arises only in the first year, because from second year onwards anyway it is going to be post incorporation period. So the types of basis which are typically used for the apportionment between pre-incorporation and post-incorporation. One is time basis. Apportion the profit or loss based on the duration. So if in the first year, first 4 months are pre-incorporation months and remaining 8 months are say post-incorporation months, then apportion it based on 4:8 ratio. This assumes that profits and losses occur evenly throughout the year, which is not true. So it doesn't mean that exactly all the costs and expenses and the revenues will be exactly in the ratio of 4:8. So that is why this is not 100% scientific. But then what you do is basically in such case, some of the expenses which are related to time, which are fixed in nature, like rent, depreciation, these things you can apportion based on time basis. Another basis is turnover basis, which is basically based on the sales of, in our example, sales of first 4 months versus sales of next 8 months. So based on that ratio, you will basically split all the costs. So apportion based on basis the turnover of the 2 periods. Obviously, this assumes that all expenses are incurred in the proportion of the turnover, which also may not be 100% true. Hence, you cannot actually ideally adopt only time basis or only turnover basis. You will have to have a good combination of the two. For the items which are related to time, you should adopt time basis, and for the items which are related to turnover, you should adopt turnover basis. The equitable basis apportion the expenses according to the nature of each expense. Those which vary as per turnover will be apportioned based on turnover, and others will be apportioned based on time, which is basically a hybrid of time basis and turnover basis. So for example, sales manager's commission or advertisement expenses, you will apportion based on turnover because these are related to sales. Whereas depreciation, rent, these are related to time, which you will apportion based on time, the duration. So this is what the table shows as an example. Gross profit, because it is related to sales, you will basically do the apportionment based on turnover basis. Expenses which vary basis turnover, such as commission, discount, advertisement expenses, these are all apportioned based on turnover. Expenses which are typically fixed in nature, which have got nothing to do with the turnover, that is rent, insurance, depreciation, all those will be split basis time. Some expenses are specifically incurred for prior to incorporation period, such as interest on purchase consideration prior to incorporation, vendor salary, etc. These are exclusively for the prior incorporation period, pre-incorporation period. So these are charged to the pre-incorporation period only. Some expenses are exclusively for post-incorporation, like director's fees. Sometimes audit fees also can be, if it is company audit, then it will be only for post-incorporation, obviously. Interest on debentures, because debentures are issued by the company. So these are basically then charged to exclusively post-incorporation period. So that was about pre and post-incorporation.